want to stick here with the discussion of Disney because taking a look at where the stock is right now, it is trading to the downside actually now, off just about 0.4%. Wall Street seeing Iger's revival here. The plan, a reason to buy the stock maybe here in the future. At least it doesn't look like that today. Well, here to weigh in, we want to bring in Jessica Reif, Ehrlich, a Bank of America Securities Senior U.S. Media and Entertainment Analyst. Jessica, it's great to have you here. I was on the call. It certainly was an entertaining call, one that was full of headlines. What was your just initial takeaway from what we heard from Iger yesterday and what that means for Disney going forward?
It was pretty much as expected. Bob Iger is very decisive. He's strategic. And his history, when he took over from Michael Eisner, just tells you that, it told us that he would act very quickly. And that's what he did. He, as you guys just said, he announced significant cost cutting, a reorg of the company, the dividend, no ESPN spinoff, and definitely not a sale because their tax basis is so low. Hulu is a question mark, but he kind of, went through everything. And I just feel like in general, there's he exudes confidence. He's had a remarkable career, and I don't think he's going to want to end this one in a poor way. So having him there for at least 2 years, it should be a very positive thing for Disney shareholders.
Yeah, he's kind of the George Clooney of CEOs. You say exudes confidence. He's so regal, if you will, but he's only got 2 years, to your point, and now 21 or so months. Let's get back to Hulu. You says everything's on the table when it comes to Hulu. What do you expect him to do there? Buy out the remaining portion that Comcast owns, or the opposite, get rid of it?
Well, two things. One, he said at least 2 years, so we'll see how long he really stays, because there's a lot to do in that 2-year period. As far as Hulu, there's a put call with Comcast in early 24. So there's really no choice here about the short-term action with Hulu. Our view is that Comcast is not a buyer, which means that Disney has to buy them out of the 1/3 that Comcast owns, so $9 billion or so. And that's early 24. Once that happens, unless they find a third party, but once that happens, the question is, what do they do with Hulu longer term? And he did say everything's on the table. And he also said that general entertainment is not really very, distinguishable from there's so much of it available. So, if they choose to go the route of selling Hulu, what does that mean? Is it Hulu the service? Is like what content goes along with it? Does it include FX? Does it include the Fox movies? So it's just it really, we don't really, it's not defined as to what would go with Hulu.
And Jessica, there's also lots of talk about pricing today. When it comes to Disney Plus, certainly we did see a drop in subscribers there for Disney Plus last quarter. But how much pricing leverage do you think Disney has when it comes to Disney Plus?
Well, they just raised prices December 8th by 38%. I mean, that's a big increase at one time. And the churn was minimal, which is really good news. So our expectation is they'll roll price increases out globally or in most markets, along with the AVOD or the advertising tier. They just started advertising in the U.S. So there is definitely pricing power. I think one of the things that people aren't really talking about right now is what a needle mover could be. And their advertising tier, again, introduced the day they increased prices, December 8th, could be a really big driver over the next 3 years or so, because Disney Plus has premium video content with, they're offering advertising. It's really a relatively limited amount of inventory. Eventually, it'll be addressable and targeted. And so it's really attractive advertising inventory for advertisers. It's a way to really, it's a good quality environment for brands. So our expectation is that this is going to be one big revenue driver. Another one that was discussed on the call last night was content monetization. I don't think they were as clear on that, but they said they would go back to traditional methods. But what we believe that means is that they kind of pull back selling content to third parties. And that's billions of dollars that they've kind of foregone. And with that, kind of the door opening up to that, with windowing, it could be a very significant revenue driver. I mean, the goal here is really to drive profits.
If you were drinking every time Bob said creativity, you did not survive the call. I've always believed that the best way to spur great creativity is to make sure the people who are managing the creative process feel empowered. But in terms of the content, he mentioned more sequels for Frozen, Toy Story, and Avatar. And don't get me wrong, those are great franchises. But what's the sticky content when it comes to streaming? It seems that every title that is really a hit these days comes from Netflix.
Well, Netflix has phenomenal content. Absolutely. It took them a long time to get there, but it's been hit after hit. But for Disney, they have branded content. So, you know what the Disney brand means. It's family friendly. Pixar animated. Marvel is, superheroes. And then Star Wars, or Lucas is Star Wars. So you kind of know what it is. And they've done a really good job in creating a lot of the Marvel content. They've created new characters and new storylines. So they have a lot to work with. But the franchise is what drives them. I don't know that they're just only going to do franchises, but they have a lot of content, maybe too much content. And that's part of what they were saying last night. Of the $5.5 billion of cost cuts, $3 billion will come from content over a number of years.
Yeah, really interesting headline number there. Jessica Reif Ehrlich, nice to see you. Thanks so much. Good insights there.